Good morning, everyone, and welcome to the European crossover webinar. And we have seen the cable moving a bit higher here, actually to new highs, at least on this move. But we'll get to that in a little bit. Bear with me. Taking a look at the data that we had come out, we did have Italian industrial orders come out. Norges Bank kept its deposit rate unchanged. Then we do have UK data, CBI trends out. That'll be in another 2 hours. And of course, we do have the ECB today. I completely forgot about that. And then for data here in the US, we do have building permits, housing starts, weekly jobless claims, Philly Fed Business Index, along with the sub orders. I should say sub data, CapEx index, employment, prices paid, new orders. So like I said, we just had this French business climate came out. That came out a little bit earlier though, but I still don't see the data yet out on the industrial orders out of Italy. And as I said, 2 hours later from now, UK CBI trends, and then ECB's today, with building permits, housing starts, jobless claims, and Philly Fed, and its sub-indexes. We'll take a look and see where the euro stands at the moment. Just a mixed bag here in the euro for now. Cable, as I mentioned, new highs on this move. Look at that. Then Aussie Dollar holding up pretty firm, 77.68. Kiwi, same thing here. Similar move to the Aussie. Dollar CAD near these lows. We made those new lows. Supports at 26, and then a big weekly support at 25.58. That's somewhat lower. Dollar peso, no surprise here, down here at these lows. Dollar yen's been kind of like stuck in the mud, and we're a tad bit lower here in dollar yen. And cash dollar index weakening a bit here, but not a lot of movement here. What we'll do is we'll go on and move into the indices. I really said to please take a look at Bitcoin today. We did make this run yesterday and extended this further move out here on the 2-hour chart here on NASDAQ. You can see here. And actually, if you make this move, I'll show you here. There. You take that. And add that. That puts us right there. And takes us right to the 161%. And so we're just kind of hanging around here. I think we knocked a lot of people out of the box. If you look at this move from the lows, that's a thing of 650 handles. I'm not saying they were at the top or anything like that, but it does open the door for us to pair back. Okay. So we'll see what happens. Certainly the bulls are definitely in control. But I will say this, if we're to see the pair back, we need to see it happen today. Good luck trying to get this thing to pair back on a Friday. If it was Friday, no way. Because we've seen this. The market just will go with that, close out the week with that trend. So if we're going to see it, it needs to pair back today. We would need to see a pretty good pair back today, which would open the door for the market to question and maybe see some further pullback into Friday. But if we just kind of pull back here and we just sit here, then No way. You wouldn't want to be sticking your head against this on a Friday. So we shall see. I really wanted to look at Bitcoin. Bitcoin, you can see it's coming down right now to that trend line. So we'll see how it holds up against this trend line. But you can see here, one of the things we discussed a few days ago, this market had come back really well. I mean, it looked like it's in bad shape. It was going to come here and break down. Bear with me. We'd come down here. It looked like it was going to, like, from here, break lower. And we came back to, much to everybody's surprise. Remember, we even got above. I said, hey, if it gets above 38,600, this thing could really start to go in and move. And certainly we did. And we broke out here. And it looked like, wow, we're going to move higher. And we broke lower. And you can see right here, as this market was holding just below 38,000. You see that area here? We fell back. We came back. We tested. And we just couldn't do it. So this is just kind of following through. Potentially, I mean, we're here to this trend line, but potentially we could still fall back probably to around here, which would be 32,225. So we'll see if they can hold this trend line, but that's the reason why. Just from a technical standpoint, it wasn't able to come back up here, and we broke lower. We do have a trend line here, but technically we can come down here to about 32,200. Take a look at the S&Ps. This is up here in the clouds also. You can see that. Bulls are definitely in control. My only concern is if, once again, if you look at take a look at the NASDAQ, we're really holding up very, very well. Is that on this move here, we've had that phenomenal move, but I think here you really got some people in trouble that were thinking, oh, this can't break out. Oh, it's probably going to have this worry. Oh, I think we'll probably pair back going into the inauguration. Oh, wait a minute, still going higher. And I think this move here, right here, was more about shorts being like knocked off. Oh, can't go higher. Stopped out. Stopped out. Stopped. I mean, I'm thinking. To me, that's what it looks like. I'm not saying that this is the top. There is actually a bigger top here. If you're looking at 161%, there's a bigger 161%. This is just off of this most recent move, but there's a bigger 161% at 13,553. And that one is, if you go back here, that's this move. That's the big one right there. That one's huge. And that would give us to this level. So we'll see. If this doesn't hold out, then we could maybe really make the run. I've got a short right now, but like I said, we'll see. But that's what I'm thinking. If it's gonna come in today, if it's gonna pair back, it needs to do today. If we just gently pair back right in here, then you don't want to be short on this on a Friday. But if it's gonna happen, that's what I'm saying. After we broke here, and to me, you break here, and this straight up run, like look, you know, they just hit it. Then that's it. They hit those stops above here, and then look. Okay, now we've probably seen the top. Boom, they hit them again. Wow. And then boom, you could start to run again. That's something that we may have just kind of like, I wouldn't say we've exhausted ourselves, but my take is you got to be able to feed a bull market. I mean, at this point, people may say, hey, look, I think we've had a pretty good run here. We do. And when I'm combining that with a technical level here, because this is a 161%, Blake also posted a chart that if you look at parallel trend line up in here off of those highs. So, but if we're going to see a pair back, we need to see the pair back, a solid pair back where we drop down here towards, let's say, 2.25, 2.5. Then the market gets a little bit worried. And then on Friday, you can see some more follow through. If we just kind of hold here and we sit around here today, forget it. Then Friday could open the door for another move. Anything can happen on a Friday, but to think all of a sudden out of the blue sky, let's say that this was, you know, the rest of today finishes right in here, then the move is just going to be continue to go even higher, I would think. Although, once again, I think you've already knocked quite a lot of shorts out of the box, so we'll see what happens. That's enough. That's a take there. Um, Let me just go and touch the news, and we'll get on to the analysis. So the Australian and New Zealand dollars resumed climb on economic optimism. Aussie and New Zealand dollars resumed their upward march on Thursday as domestic data spoke of continued economic recovery, while markets globally looked ahead toward more stimulus in the U.S. under President Joe Biden. The Aussie climbed to 77.70, and the Kiwi reached 71.95. Australian data showed 50,000 new jobs were added in December. The economy now has recovered more than 90% of its losses suffered during the coronavirus lockdown. Jobless rate dropped to a 7-month low of 6.6%. Speed of the recovery of jobs has led to some to wonder if the RBA will end its $100 billion bond buying program in April, though most assume it will continue, if only to stop the Aussie from surging even higher. That outlook has helped to hold the 10-year yields back at 1.04%. New Zealand has also eased back to 1.03% from a recent peak of 1.113. Westpac on Thursday ditched a call for two more rate cuts from the RBNZ, and forecast rates would be held at a quarter basis point for the foreseeable future. Developments over the past month will have called into question the degree of monetary stimulus that would be required, said Dominic Stevens, chief NZ economist. The housing market has outstripped even our very bullish expectations, he added. Now's the time for the RBNZ to sit back and observe how the stimulus it has provided transfers from the housing process to the economy. Dollar on back foot as Biden's optimism bolsters riskier currencies. The dollar declined versus major peers on Thursday as optimism that the new U.S. administration's massive stimulus program will bolster growth. Riskier commodity currencies were supported in Asian stocks followed U.S. equities to rising to new records after Joe Biden, who has laid out plans for a $1.9 trillion pandemic relief package. The risk sentiment is quite positive right now, and we expect it to remain so this year, with growth expected to rebound quite strongly. The greenback should also strengthen. The currency slipped to the Canadian dollar to 26.11. The dollar slid to 8.456 Norwegian crowns. Biden was sworn in as the 46th president in the United States, vowing to end the uncivil war in a deeply divided country, reeling from a battered economy and a raging coronavirus pandemic, killing more than 400,000 Americans. North of the border, Bank of Canada on Wednesday that the arrival of the COVID-19 vaccine and stronger foreign demand and brightening the economic outlook in the medium term, opting to keep its overnight key interest rate at a quarter basis point. The ECB also decides Thursday with no changes expected. European countries are struggling to contain the novel coronavirus, and that a new variant could lead to stringent lockdowns and more economic pain. Mark says if we can take a look at gold. Okay, we'll take a look at gold, and bear with me. John says, what time does this start? My email says 8 a.m. GMT, so I think it's wrong. Thanks, John. The European crossover is going to be every day at 4 a.m. Eastern. 4 a.m. Eastern. So it just started 15 minutes ago. So it looks like you came in just in time. And welcome. And what we do is just give you a real quick overview. What we do is let me see. Are we still on this page? Bear with me a moment. Yeah, we are. Okay. So generally what we do is we come in and we hit the majors real quick. Just a quick recap, real quick. Boom, 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 boom. Then we usually jump into here. We'll cover the indices, primarily the NQ, which is what I primarily trade. I did trade a lot of FX, but I'm really used to trading the NQ now. And because of, although it hasn't been, that's been a little bit tough because it's been a one-way road, one-way trip, one-way action, and I like to day trade, so I need two-way action. but primarily that. We've also started covering Bitcoin, which we did just go on and cover that. We can take a look at Ethereum. That's also broken lower, but primarily we're looking at Bitcoin. And then from there, we hit the news a little bit, cover a couple of news, FX news. If there's some about gold, we'll do that. And then we go on and do the analysis for FX across the board. Bear with me, I'll show you, and then we'll get to that. And then we cover our bias chart. We have the majors here, the cash dollar index, and then the cross rates, the more popular cross rates. So with that, let me just go on and take a look at gold. Mark wanted to take a look at gold. And then if there's something you want to look at, I can always take a look. We generally don't look that often at gold, but here we are, gold. And we talked about gold. Remember we talked about this? I was saying, hey, look, this is this area we need to hold. That was a few days ago. And then yesterday I said, hey, look, if we're going to move higher, we need to close above 1869. And we did. You see that? We did it. So it's doing okay. I think it could be doing better. Okay, but this isn't bad. That's what I'm saying. Is it was good that we defended the 1816, and we're looking at the daily chart with gold. And yesterday when we were going here, we were actually right here yesterday. Go, hey, look, if this market's going to go anywhere, it really needs to close above 1869, and we did that. You see here we're at 1872. The real key, and I said that yesterday, is going to be right here at 1901. Then you see if you look at it and you're thinking, well, that looks feeling good. It's when I bring this out, then you see how important it is. Remember, I showed that to you, and I said, wow, look at the way this thing is broken down. Kind of reminiscent of what we were looking at with Bitcoin a little while ago, how we just broke lower. Well, you've seen that here with gold. So now when you look at it and we pull this further back, you can see why it was so important. They had to hold 1816. I said, hey, that's support. When we came in that day, it was already above 1816. I think we were already like at 1830 or something. I said, hey, well, this is good, but it needs to hold this 1816. It is holding there. Let's see how we close. At the time, we said, hey, these are the key levels. This one's the next one here, and this one's much further out. So we held 1816 for the day, and like, okay, that's well and good. We had to defend it. We did. We finished with the hammer. Where are we going to go the next day? So we did that, and we were here yesterday. If you remember, I think we were around here yesterday at this level, and I said, hey, look, we've got to get above 1869 because you look at this as the market held down here. Like, see how the market got up here to 1900? We broke back down to 1869. We held it and we motored higher all the way to 1916. So that's a level there of resistance I had to fight. And I said, hey, look, if it's going to go anywhere, it's got to close above 1869. We did. So that's good, but we're not out of the woods. Let's just say we held what we had to hold. We needed to follow through. We got above 1869. That's the second step. In order to garner, as I said, that's what you had to do. I mean, you really needed to close this. You had to do, or it was going to break to new lows. Then we needed to get above 1869. But to get out of the woods, we need to if you get above 1900, now people are saying, whoa, it's actually defending. Actually, then you'll get for the momentum to push this much higher. But that's your next key level. If you're looking at it from a very, very short-term standpoint, it'd be right there at 1882. Immediate. So you might see this market stall a little bit here at 1882. Some people may take a little bit of profits against that level, but the next key level is going to be 1901. So that being said, let's go on and move into do the analysis on the majors. Okay, yeah, John, he says, thanks for the welcome and quick review. And one other thing we do, John, is, and I was just going to go on and touch on that. So let's go back to what we call our main screen, so to speak. So one of the things I do is we cover the Fang Man because I'm trading the NASDAQ. But I will say another thing is, it's been tough. One of the things we were covering with the Fang Man, we cover Apple, Microsoft, Amazon, Google, NVIDIA, Facebook, and then we'll pop over here. And then we'll take a look at Tesla. And then here, we used to keep it right here for just Netflix, but we'll usually have like PayPal. And actually, should put this back to Netflix. Okay, so you can see Netflix with that big run up. Let's put this back to the daily. See that huge run up we did. Tesla back to the daily. So it really helped when I would trade NQ to look at Fangman, but now the market has been moving more like well, wait a minute, Nasdaq keeps picking these new highs. Well, we must be flying in Apple and Microsoft and Amazon. We're not. We're just like at the highs. That's it. We haven't gone anywhere, but the market's reacting to. We'll go here. Take a look. The market has been reacting to the pandemic plays. You see, look at PayPal, look at Peloton, look at eBay. You see here, so it's broadened itself out the way it's trading. So anyway, let's go on in. That's your quick overview. Let's move back over here, and we will start the analysis. So now you have a good overview how each day usually goes. So we go and hit those. We usually look at the Fangman, these here on the daily, if things are moving in the 2 hour after we finish the bias chart. So here we are. Let's go on and move into the bias chart for the FX, and we start with the majors, and we'll start with the euro. We do have the ECB today, so take a look at the euro. And I put my little notes in here, and it's in the Asian analysis. So if you go onto the main page, there's the analysis for technical, for basic technical, like there's fundamental and harmonics and I don't know, a couple of disciplines. But anyway, the one I do is the basic technical. Blake does it. I just do the Asian analysis. So here we are. So looking at the euro closed slightly lower in the tight range. Resistance will remain 2172 with support at 2096, which is what we're at. The only thing we've done is we've loaded. Now to explain to you about the bias chart. So primarily, I day trade. So the bias chart sets up the levels for the support and resistance levels for the day ahead over the next 24 hours. So you'll see this, that usually the levels, the bias chart levels, if you're looking at the euro, I'm given where I'm looking for the market to potentially run into. And when I put these levels, it just means that up here, you'll see a fight between buyers and sellers, and the same thing on the dip. You'll probably see some people come in and try and support this market. What I'm showing here is at 2096 up in here. You see right there, to go and support that market. That's the level that I'm looking at. The 2172, that's going to be our resistance. We might see this market move a little bit further because it's ECB day. So if they do something unexpected, we'll probably see a wider range, but I'm just going to stick with the ranges here. 2096. Well, I guess, let me see, 2135. We'll actually drop this down to 2073. Once again, only because the ECB's, we could see a little bit of more of a move here. So this is a very, very tight level. And what some of the people do here in the room is they'll use that in conjunction with their own trading. So they'll have their own idea where, okay, I'm going to get long with the euro, whatever. And they may just use this to kind of say, okay, well, that's coming in, that's confluencing at the same level I'm looking at, and they may use that to come in. So, but these are very, very tight levels of what we're looking for the market to potentially move to through the course of the next 24 hours. So that's how they use this. So you could say, well, God, resistance is really around 23 and support's around 120. Well, that's so broad that may not do you very much good unless you're swing trading it. And you know how FX has been. It's been really tight. So this really works well because it's very tight resistance and support. So now let's go and move into the cable. Look at this monster. This thing is incredible. And we'll come up here. And it says, cable tested the bias chart resistance yesterday, which was 3709, before paring back slightly. Resistance for Thursday would be 3709 with support at 3609. This is a good example because, like I said, I do the analysis in Asia. And generally it'll still hold, but look, we are breaking out to new highs right now. So that would be silly just to say, well, lots of times if the market's above it, it may be just a little bit above it. I'll say, well, still we're going to keep that. But look how many times this market has challenged this 3709 area. I mean, the high right here was 3702 here, 3702 again, 3708 here, and yesterday 3718. Oh, actually 3717. I kept the 3709, and you can see the market paired back right here to 3650-ish. But now we're blasting again. So it'd be silly to go, nope, still 3709. So what we need to do now is look to a daily. Where can this monster go to? I can't believe it. So let's go to the weekly, pair this back. Where can this thing go to? So we're coming here. And you can see where the touch is coming on the close of this week, and some body touches comes in at 37.93. If you look at this wick right here, you see that right there? That wick comes in at 37.65, which is also the same here and here. So let's go with that, 37.65. Holy smokes, that thing is just bananas. 37, we'll go with 37.65 today, but potentially if you want this week, this close on here this week, that would be 37.90. I've got right there. I think it's 37.93 or 37.95. But immediate, if you go with this lower wick right here, comes in 37.61. Man, that's bananas. Hold on. So let's move this back to the daily. And resist support now is going to be reflected right here. And that may even be a little bit too weak. It's going to be this. You see this bar right here? That close? That's going to be support. 36.64. Sheesh. So that's what I'm saying. We have real tight ranges for this. So now let's go move into the Aussie dollar. So the Aussie closed higher on Wednesday, but within the prior week's range. Resistance will remain at 77.72. You see that right here. With support at 76.42. So no changes here on the Aussie. That remains the same. Let's go on and go to the Kiwi. The Kiwi traded in a 30 pip range on Tuesday. Okay, so Blake had actually posted some analysis on the Asian when he was, I guess, look at the Aussie, did it for the Kiwi. So right here, no changes here. At least here's where I see resistance. You see the close right there, that bar? That's going to be resistance. And you can see how key this is. If you look at this body close, let's go and pull this up. I like to go with the bodies for my support because to me, it's key where the market closes. So I always call it put up or shut up time. So because if you're holding a position, you're going to have to get out, or that would be the thinking. So you can see here, this close right here coincides with the top here on this wick, coincides here almost with the lower wick here. So that resistance right now would be 72.26. And support would be, let's go with this bottom of this opening bar, be 71.62. So you can see that we keep the ranges pretty. We keep the support and resistance. Uh, Not only tied, but we reflect it as to where the market is right now. You see what I'm saying? We're not looking for big moves. Well, if you thought this market was going to pair back, the real support's going to come in down at 70, 70.25. Well, that's almost 200 pips away. And where's the market really trading? When you look at this market broke, we put in this mini inverted hammer, and look at this solid follow through yesterday and so forth. So would this market come all the way back down here today? No, that would be realistic. Anything can happen. Hence, we tighten up these support and resistance levels for the day ahead. So anyway, just want to give you an idea what the thinking is there. Now we'll move on to the dollar CAD. Then we have an understanding of what we look at, John. So now look at the dollar CAD. It closed at new lows again. Support is going to be 26, followed by the weekly level of 25.58. Resistance will be 26.96. So once again, support 26 even, and just to be on the safe side, so someone knows, like, I'm buying it down here. If someone's thinking that, but I mean, where's my stop going to be? That means we're almost at 26 right now. Okay, so that's what we're going to put 25.58. 25.58 is huge. It's a weekly level. So support is going to be 26.96. Now, it might seem like, well, 26.96, that's a little ways away from where we are, aren't we? That's about, 70 pips away, but look how oversold we are. So we could quickly fly on up here to that level, and it wouldn't even mean anything. I mean, it would mean something, but I'm saying is we would still be real super weak. So we won't really want into any real resistance until, not real resistance, but at least some resistance until we get to 26.96. With that, we'll go to the dollar peso. Okay. So the dollar peso posted another new low. Support remains at 19.53. You can see that right here. With resistance for Thursday at 19.68. So we'll update that. And then you can see here that the bias is still bearish. So you see on here, this reflects more like a short, medium-term outlook. So you can see, obviously, the euro is still bullish, cable certainly bullish, Aussie New Zealand dollar, dollar CAD is bearish, dollar peso remains bearish. Now we'll move to the dollar yen. Well, the dollar yen has been a big bump on the log, and I was going to say still no changes, but we actually saw this market break down a little bit. So support, once again, short-term basis, we'd be looking right there. You see how the market kind of held. And you can see we have a lot of touches there. You see this close, this wick, and right here. So right now, that's going to be support. 3, right there. 329 for today. Doesn't mean it couldn't go lower, but it means that we should see some fighting at 329. Resistance on the upside, well, we've broken lower, so it still wouldn't be way up here in the clouds, so to speak. So we'll move that resistance right here at this body touch, right there. You see, they got these wicks, this body touch, that would be 389. Now let's move into the cash dollar index. The dollar index closed Thursday with a small legged doji. You can see right here. Support on Thursday would be 90.02 with resistance at 90.78. So 90.02. And 90.78. That seems a bit of a stretch here, but maybe the euro runs into some trouble with the ECB. I don't like moving it all the way here, but If we were to see a pullback in the indices and the ECB cause the euro some pain, we could see this push. The real resistance is really going to be there at 90.78. It's kind of reminiscent of what I told you about the let's see, was it the like the dollar cat? Is it we're really not going to up in here? You can move here, 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 and it doesn't mean anything. It's not until the rubber doesn't meet the road. Think of it this way: the rubber doesn't meet the road until we get to 90.79. Then you'll see a battle. So with that, we'll move into the cross rates, which is going to be the Kiwi yen. And we're still holding up. You saw 3 bars. We're even a little bit of a gap here. So we're looking like, do you think you can make it all the way up to 75.04? That might be a little bit of a stretch, but look, we did have, look at this solid black body, then the white right here in the middle, push back down and right back up here. So the real resistance really is, and you can see the wick here, isn't going to come up here till 74.99. That's a stretch to say it would go that far. Let's take a look at a 2-hour chart to see if we see something in between. And we do. You see right there? Right there. 74.72. So that's going to be resistance. We usually look at our 2-hour charts for a little bit of shorter term view. I mean, if you're scalping, you want to, I mean, a very short term would be 30-minute, but in this case, we're looking at the 2-hour chart. Let's go back to the daily. And where's going to be support? Well, we broke away from here, and you can see this right here, which is going to go with this level here, the 74.05. That was a key level before. They did goose some stops once they got above it. So 74.05 on the downside. Once again, focusing on a short-term basis. Let's go and move into the euro pound. Man, this thing is just looks terrible. And this 88.75 is huge. It's a weekly level. You can see right there. So for us to lose that, that's pretty bad. So how much further are we going to go? All right. There really isn't any real solid support or reasonable support until you get down to about 88.15. And that's the high here on this wick. So we're going to go with that, 88.15. Resistance is going to be right there, 88.93. Once again, this market, you could say, oh, there's some resistance here. 88.75 is huge on a weekly basis. This would trigger some buying. So I guess for a short-term basis, you will see resistance there. So we'll go with that. The 88.75, which previously was support, is now going to be resistance. On a very short-term basis, they would sell against that. And you wouldn't get stops to be hit until you get above 88.95. So moving on to the euro odd. We're over here sucking wind, but we do have the ECB today, so we could still break this lower. Euro odd, we had 56.65. This thing even broke lower than that. So we're just going to go with the low here, and that's going to be 55.91. And that's a big level, that 55.91. So 55.91. You could see that tested because we have ECB today, and so we could see the euro weaken. Resistance on the upside is going to be this lower wick right here, which would be 56.70. Onto the euro Kiwi. Same thing. The euro's under some trouble. We could see it come right down here, and that's going to be 68.01. So at least you know what you're looking at. Resistance is going to be right here. You see this wick down here and this body right there. It's not perfect, but for right now, it'd be 69.11. Okay, on to the Aussie yen. We're still holding up here. Saw 2 good days and then a little bit followed through. Same thing. We'll take a look at the 2 hour and see if we can find something here. It's going to be right there. Actually, you can see this wick coming across here. So we'll go there, 80.48. And support, let's go to the daily. You see the wicks here, right here, and that. We're going to go with that for support, which is 79.79. And then on to the guppy. Well, we had 42.24, and this thing is still looking like it wants to punch a little bit higher. And sterling is doing well overall, so we're just going to go with yesterday's high, which was 42.32 for our resistance. And support, these wicks coming across the board. That actually is where the market opens up at 41.33. We had 41.34. We'll stay with that. And then lastly, sterling odd. Well, sterling's been coming back, but Aussie's been pretty strong anyway, so I really don't see this market going anywhere. If it's going to, the stops are going to be right here. That's where the resistance is going to come in. 77.09. Right there. Still going. And support is going to be right there. You see the wick here, and the wick's coming across here. That will be support, which is 75.79. There's the buys chart. Move this out of the way. And so one of the things I was talking about is if you look at NASDAQ, so you look at NASDAQ and look at this move we've seen here. Here's on a 30-minute, but here's a 2-hour chart. You're thinking like, let's pull it out. Look at this. Let's pull this out. Wow, this NASDAQ is crazy. Look at it. Man, everything must be going to the moon. Okay, so now let's go to Fangman. And you're like, oh yeah, those must be really pretty high. I haven't followed NASDAQ, but they must be high because look, I mean, those are the ones that have the most weight, right? Yep, that's right. So here's Apple. Oh wow, that's weird. That's not it. I mean, it's close to its highs, but those aren't all-time highs. Nope. Microsoft. Well, Microsoft's doing pretty good, but yeah, it's still not at all-time highs. How about Amazon? Holy smokes, Amazon's still, what is it, about $300 away from its all-time highs? Yep. Google's doing really well so far. You see there? Now that's all-time highs. NVIDIA, not anywhere near its all-time highs. We're what? Look at this. $40 away from all-time highs. Look at Facebook. You're like, wait a minute, that's kind of weird. I mean, none of this is all-time highs. So, like I said, then we have to go and move into, we'll take a look at Tesla. Now, Tesla, that's its own animal, but look at, here's Netflix. Netflix finally did pop up, but it had an earnings story. The reason that had that big, gigantic jump was because it's actually gone to an earning positive, and they're even thinking that now they're even going to not even have to borrow. They're doing so well from a money standpoint. I mean, the revenue, the amount of revenue flow they have coming in, they're like in a super, super good shape. But the ones that are actually running this show, as I mentioned before, have been the pandemic plays. So you look at PayPal, like, wow, now that makes sense why the NASDAQ is all-time highs. Peloton, yeah, that's pretty close to its high. eBay, yeah, that's kind of breaking out. these are the ones that have actually been driving this market. When you look at where the weight is in this Nasdaq, like how can the Nasdaq be going this high when the ones that have the most weight aren't at all-time highs? I mean, they're doing okay. Google's doing very well, but they're not at all-time highs, and that's what's happening. It's broadened itself out. Now, that's why I go back to the thing is I think we have reached a key technical level. Well, we reached 161% of the most recent up and down move. It's not the major one, so maybe we're going to see a pullback today, potentially. We'll go back to that and then wrap up the day. And as I said before, and I was sharing on Twitter, hey, look, I'm not calling for a top. It's just that at this point, we've knocked some people out of the box good but good. We broke out of this trend line here, and I think some people didn't really believe it, and we broke a little bit higher. And to me, you see how it's just a straight up play? Like there's no like you move higher, you kind of give back a little bit. Look at this, just like they're just running people over. You see what I'm saying? And then when you get these big slices, okay, that's normal because you're in a tight range. Like you see right here, you're in a tight range, and you break above here, you get a big move. Here you kind of get a minor move, then you get a little bit higher. Look at this move here. Wham! So they ran over some people, they hit some stops. Wham! Again, they ran over and hit some stops. And look, there's not been no pullback. You see here? So that's what I'm saying. I think it's susceptible to a pullback right now. We did hit 161%. I did show you if you take this bar from this low to this high, we'll extend it out. That puts us here, which confluences with the 161%. And like I said, my take is, like they said, you got to feed a bull market. So who's left? Not the people who are saying this is a top or anything, but you have to think, wow, anybody that got short, they got run over. That's how you fed the bull market with these stops. Stop. They were stopping people out. But now we haven't had much of a pullback. Doesn't mean we're going to go like I think we're going down here. I'm just saying it's susceptible to a pullback right now because who's going to step in now and buy it? You've probably knocked out a whole bunch of shorts, so it's susceptible. The key thing is if this thing were to only pull back to about here for the day, then you do not want to be short on this going to the weekend because they're just going to go with the momentum. But if we're going to pull back, we need to see a good pullback down to around here to get the market thinking, oh, I don't want to keep my longs going into the weekend. Then we could potentially see some follow through on Friday. But right now we're holding up pretty well. But that's where it is. That's where we're at. And that's the European crossover webinar. Thanks for joining us. And we'll get the bias chart posted in the chat room. Have a good day trading.